Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, August 15th, 2019. We are now in the final hour of the trading day, and as I mention every day, I believe that the prices that are as close as you can get them to the close of the market are the most valid prices to make your buying and selling decisions from. That is because the hedge funds, the market makers, the large financial institutions come in and take over the pricing from the algorithms during the middle of the day, during the time that I consider noise. And so those last prices, when they take control of, I feel like that's the best company to be in and the most valid prices. So thank you all for coming today. I appreciate you investing your time into watching this live stream. I really do hope it's helping. I hope that you're starting to internalize some of what I talk about here as far as position sizing, as far as being patient, as far as adhering to your stops, looking for good setups. I've had quite a few emails lately from people telling me that the live stream has really helped them in the way that they approach the market. And I'm really glad to hear that, because that is the reason that I started this podcast. I wanted to share with you what I've learned over the last 24 years as being a full-time trader. Because, in my early days, I started out, it was rough sledding because I made every mistake in the book. And at some point, you've either got to get better or you've got to quit. And so, I made a conscious decision many, many years ago, over 20 years ago, that I was going to learn how to do this, learn how to do it correctly. And really what it comes down to, everybody, it's pretty simple, is position sizing correctly, not taking too large of a position size, not having too many correlated trades, picking a good setup that allows you a good risk to reward, getting out if you're wrong, and letting your profits run if you are right. And that's basically it. Sounds pretty simple, but it's not easy. And the reason it's not easy is because, fear and greed and past mistakes come into play in the present on, I don't know whether I should take this trade because last time it didn't work. It's fear and greed in your emotions. So that's why I always talk about it so much, but the actual mechanical part's really easy. The setups, once you learn them, not that difficult, but it's staying stable, having a stable mental state, and trading your process, right? So anyway, let me just make sure everybody can hear me. I hope they can hear me after I just rambled off that. Hey, Murat's here. Good to see you, Murat. Thank you for coming all the way from Norway. Hope you're doing well. Hey, Frederick. How you doing? Good to see you. Frederick is from France. Nice to see you as always. Murat says, you can never finish the long list of mistakes to be done. Boy, isn't that the truth? There's so many. There's so many pitfalls out there that, whether you make a mistake and don't take a trade, whether you make a mistake and you take a trade and then it goes against you, or you enter in the wrong amount of shares, or your internet doesn't work, or the dog's barking and the UPS guy's at the door. I mean, there's all these things that you have to overcome in trading. Just crazy. Frederick says, bad day today. I clicked the wrong button to buy and sell. Oh boy. I know, it happens. It happens. You have to be careful. And I know that, people just get into the groove of, okay, I'll buy here, I'm going to sell here. It just becomes muscle memory, but sometimes you hit the wrong button. It's happened to me a million times. Usually what happens to me is if I'm short a position and that I go to get out of a position because I don't short a lot, instead of hitting buy to cover, I'll hit sell and I'll short more shares. And I think I'm flat, and then I have double the shares. So it hasn't happened for a long time. I'll have to tell you guys a story one time. This was the most unbelievable nightmare trading story I have ever gone through. It was so brutal I can hardly even talk about it. it actually ended up okay. But yeah, it's a good point, Frederick. You know, take that extra half a second, make sure you're hitting the right buttons, make sure you're putting in the right amount of shares. I mean, I've never met a trader where this hasn't happened, but you know, just take that extra half second, make sure you're hitting the right button and the right shares. Hey, Mount Doji, how you doing? Good to see you. Sounds like maybe you got your ATR channels worked out on stock charts. So that's good. I honestly, I would be lost without ATR channels. I really would. They help me in so many different ways. And I read that article that you sent me. It was interesting. Did you notice they talked about Kerry Lavorne in there? That is one of my mentors and teachers. And he is the one that taught me about ATR channels. And I'm really glad he did because it's a big part of my trading. Frederick says, good if I do like you, I am becoming a better trader. Good. Good if I do like you, I am becoming a better trader. Well, good. I mean, that's the goal, is to try to just become a better trader every day in every aspect of trading. So, all right, well, listen, so the plan for today, everybody, is first of all, I'm going to go ahead and run the U.S. legal disclaimer. Then I'm going to come back. We're going to take a look at my current positions, when I bought them, why I bought them, and how I'm going to manage them going forward. Then we're going to do just a few minutes like every day on trader psychology. Then we're going to come back. We're going to take a look at my watch list. We're going to go through each stock in my watch list. We're going to take a look at support and resistance levels. We're going to take a look at ATR channels. We're going to take a look at RSI. We're going to take a look at MACD. We're going to, very importantly, we're going to take a look at risk to reward ratio. So these are, you know, all the things we want to look at. Ideally, I'd like to see 2, 3, 4 indicators lining up, because the way I look at the market is, you know, whenever you have some type of technical indicator, it's a technical indicator because there, in my opinion, there will be buyers coming in at that level, right? And if you get 2 or 3 or 4 lining up, then you may have 2, 3 or 4 times the buyers. And, you know, it's important when you want to go long a stock that you're in there when other buyers are interested, right? I mean, it just makes sense. You don't want to be getting in a stock when everyone's going to be selling, right? I mean, it's just common sense. But it took me a while actually to kind of understand that. And that's why levels are so important. You hear about levels, you hear about resistance levels, support levels. Really all that means to me, these are levels where groups of buyers are going to come in or groups of sellers are going to come in. Mount Doji says, I noticed they talked about him too. Yep. Smart guy, Kerry Lavorne. Really smart guy. I have a link to one of my lessons. It's in the description of this video, is on V1s, V2s, but I have his website in there and talk a lot about Kerry Lavorne. So yeah, very fortunate that I met Kerry Lavorne. I met Kerry Lavorne through Dr. Alexander Elder. That's his partner, and learned one type of trading from Dr. Alexander Elder, mainly double bottoms with bullish or bearish divergence, and then you know, the V1, V2 entries. I learned that from Kerry Lavorne. So all right, and then so yeah, we're going to go through the watch list, see if we can find anything to buy today. After that, if you have any questions at all about anything I said today or any of my analysis on the trades or any possible trades we're going to take, please let me know. Or if you'd like me to take a look at any particular stock symbols that you're interested in, I'm happy to give you my humble opinion on that as well. So that is the plan for today. All right, so hang tight. I'm going to run the U.S. legal disclaimer, and I will be right back. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. So, market's been all over the place today. We're up 112 points on the Dow. We're up 1 point on the Nasdaq, and we're down, or up 8 points on the S&P. So we've been all over the place. Walmart had really good earnings that really helped the Dow a lot. It seems like 108 seems like it's up a lot, but because of the Walmart earnings, that's a big part of it because they're weighted heavily in the Dow. So it's been a pretty volatile day. Yesterday we had the worst down day of the year, 800 points. So it's been pretty crazy. So let's be careful. Let's be selective in the possible entries that we're going to take a look at. In this kind of environment, it's more important to be in capital preservation mode than make money mode. But at the same time, these dips do give us opportunities, big opportunities as well. And so we kind of have to, balance the risk of making money compared to preserving money. But preserving money is always the most important. So basically the takeaway here, everybody, is, there's good opportunities when the market's volatile, when you have dips, but you have to make sure that the structure of your trade makes sense to you. You have a good risk to reward ratio. You actually have a valid signal. And if you don't try to just catch a falling knife. Don't try to just take a stab at it. Because if you feel like something's low and then you take a position in it and then it goes lower, well, if it was low the day before, it must be better now when it's lower, right? It's a bad mindset to get in. It's a trap. It's a trap if you don't get out. And once you finally make that decision in, this is stupid, this is too low, I'm going to buy it here, I'm just going to hold it, now it's a buy and holder, then you're not a trader anymore. Then you're a long-term investor. So anyway, all right. Frederick says, Greg, Jesse Livermore book is not too outdated to read now. It's still valuable to read. I think so. Reminiscence of a stock operator. Wisdom in trading, I don't think is bounded by time, because, what is trading? Trading is, when you look at a chart, what is a chart? Chart is just representing human emotion and patterns that happen within human emotion, and human emotion repeats itself, right? They say history, what do they say? History doesn't repeat, but it rhymes. So, we're trading human psychology, really is what we're doing. And human psychology doesn't change much. There's fear, there's greed, there's fear, there's greed, there's cycles. Johnny says, I heard fourth worst bad day ever. Did I say worst day ever? I meant the worst day of 2019. Sorry, Johnny. Yeah, I know it was the worst point down day in 2019, but not forever. Yeah, sorry about that. Yeah, 2019, it was the worst day. Mount Doji says, reminiscence of a trader book is good still. A lot of great anecdotes. Yep. One of the best. All right. Well, there you go, Frederick. You have the consensus from the group. I would read it. All right. First of all, let's take a look at my current trades. I don't have a lot of them because of yesterday's big tsunami of selling. But the one trade that we do have is good. So I did buy Philip Morris back here on the 13th of August when we had this bullish engulfing bar. Bullish engulfing bar means that the current day that I took the trade went lower than the previous bar, went higher than the previous bar. There were no sellers under here, and there were still more buyers over the top. Plus, we came down, we moved sideways. Did this technically is a V1 too, right? Because this did wash out that. But essentially, I bought this because of the bullish engulfing bar, the move over all the major moving averages. Yesterday, it was down a little bit, but not too bad considering what the market did. Held the moving averages, so I did hold the trade. Today, it's up nice. It's up 1.34%. I did hit one profit target here. I still do have some nice room up until we get up to the 1 ATR channel, because we'll probably start finding some resistance in here. You can see the moving average channels are starting to fan out. That's always what you want to see. We're above 50 RSI and hit one profit target. So this is looking pretty good. I'm really grateful to have this trade today on such a wild up and down trade. So how am I going to manage this? Well, as long as it keeps moving up, I'm going to be phasing out of the position. Where's going to be my initial stop? My initial stop right here, right now, would be the 20. It lines up nicely with the halfway of this bar. When I first entered the trade, I was kind of thinking about the 100 and the -1 ATR channel, but it has moved now. It has moved 1.34%. So I don't like to take trades where I have a nice profit and then I give it back and let it go all the way back down. That's why I like to trail the trades. But anyway, as long as we keep making higher highs or inside bars, I'm okay with this. But once we make a lower high or we take out a trailing stop to the downside, I'll be out of it. But as you guys know, I like to play offense and defense. I like to play offense by scaling out as it moves my way. I like to play defense by adhering to my stops, and also playing defense by moving my stops up as the price moves up. So it's very important, guys, to play offense and defense at the same time. Oh, I did say it correctly. Okay. You said, I was just saying I heard it may have been the fourth worst ever. Yeah, I believe that. I believe that. I haven't seen too many 800 down point days. Frederick says, okay, thanks. I'm going to read it. Good. Good. All right. And our only other position today was the S&P. So the famous S&P trade where I buy at the close and I sell the very next day every day. And yesterday, finally, this has been pretty brutal lately, but yesterday I did buy it at the close at 289 or 283.90. I sold it today at the open at 284.89. So we printed some black ink there, which was good because there'd been a lot of red ink on this in the last couple weeks. In case we have some new viewers, the reason that I buy the S&P every day at the close and sell it first thing in the morning, I base it on this back test from Liz Ann Saunders at Bespoke Invest on Twitter. But there's two approaches. One, you could buy the SPY at the open in the morning and sell it at the close every day. If you did this every day from 1993, you would have a negative 13.9% return. But if you do the opposite, which is I do, which is buy the SPY at the close each day, sell it at the open the next morning, you would have actually returned 634.2%. And this chart, everybody, really shows what a long-term edge will do for you. And there is an edge to this approach. At least there is from now back to 1983 going forward. Who knows? But I would rather base my trade off something that backtests well in the past than something that doesn't, right? But look, I mean, letting this edge play out since 1993 would have made you a lot of money, right? It doesn't always go up. Maybe you started here, you'd have 2 years down. You'd say this is the worst system ever, right? And I wouldn't disagree with you in the short term here, but you have to look at this as long-term trading. I essentially look at this as a long-term trade that I have to make a couple clicks every day instead of just buying and holding, because I'm trying to extract the edge out of this, and the edge comes from people bidding up the prices in the aftermarket and bidding them up in the pre-market. And I mean, when you think about this, guys, from 1993, has the market gone up? Of course it's gone up. We hit a new high a couple weeks ago. It all came from the after hour in the pre-market. It did get. So, technically holding something overnight gives you an edge. I mean, it's clear from this chart. So it's important that, if you, use this approach that you do it with a small amount of your capital. I use 10%. So if I had a $100,000 account, I would buy $10,000 of the SPY each day, and then I would sell it first thing the next morning, and then rinse and repeat, rinse and repeat. That's the thing with trading. Find yourself a setup that has an edge, that has a good back-tested, quantifiable, proven approach, and then repeat that edge. Doesn't mean it's always going to work every time, but you have to let the edge play itself out. Remember, every trade is just one of the next 1,000 trades. It's not that big of a deal. Don't risk your lifestyle on it. Don't risk your mental health on one particular trade. Think of yourself as a casino. Think of yourself as dealing those cards in 21. You're going to win, you're going to lose, you're going to win, you're going to lose. But over 1,000 trades, the casino's going to win. And it's the same with trading. So anyway, that is why I bought the SPY. I'm thankful that it was a winner today, finally. Because the last couple weeks have been pretty brutal with this. But I've been using this since December 26th, and the edge has played out. It has been profitable. So I will buy this again at the end of the day, but 2 for 2 today, which I'm happy for. Certainly not bragging. I'm just saying I'm happy that we finally printed some positive ink today. Frederick says, Greg, you cannot get a robot to do the trade for you on the SPY? Yeah, probably. I probably could. I guess I'm old school, Frederick. I'm too old. I'm just used to doing it myself. I don't know if I trust it, but that's just me being old school. But I don't know. I like the process. I like the process of writing stuff down. I like the process of entering in the trades. I like the process of knowing it was done right. And you have to remember, I've been doing this for 24 years. It's pretty hardwired, ingrained into my approach. But yes, you probably could. Yeah, you probably could. So that's it on the position. So listen, you guys know that I like to talk about trader psychology. It's the most important part of your trading. It's going to make the difference between whether or not you're a long-term profitable trader or a long-term unprofitable trader. Everything that goes on in between your ears is what's important, and your job as a trader is to first and foremost to manage risk, and also to overcome your human frailties and your human emotions, and fear and greed, regret, missing out, all the things that that trading will bring out in you. But this is from Tom Canfield. He's a professional trader. He has a good channel at Canny4 on Twitter. I would recommend that you subscribe to his channel. He has some good posts. He talks about trader psychology. He has some analysis of the markets, but I find it useful, and so I would suggest that you subscribe to him on Twitter and read his post every day. But I thought this was pertinent to the market recently. Tom says, corrective phases are normal and necessary. If that is what we have, just let it play out. Might be a day, might be a week, a month, a year. Let's hope not a year. Let's hope not a year. It's cycles of ebb and flow, but for some reason we are only calm on upswings. Find your downtrend zen and it will all be okay. And so that really spoke to me because, we're in this, we've had this volatility lately. We're going down. But again, everybody, it's just a normal part of the market. When you go up, after a while, you run out of buyers, and, then more supply. Sorry, my dog. Then more supply comes into the market and we go down, right? But there'll be buyers again at a different level. Kiwi, hey. Ah, boy. Sorry, everybody. Time out. Okay, sorry about that. I got the 1-2 punch of the gardener and the dog barking. He always seems to come right now. But anyway, I apologize for that. But the takeaway here is that, look, sometimes the market's going to go down in a corrective phase. It has to find some levels, right? It has to find some new buyers. It has to find some buyers that are going to be committed to buying there and not having their finger on the selling trigger, and finding some stability. So, as I mentioned before, there's a fine line between capital preservation and looking for good opportunities. But, these dips can be a good opportunity a lot of the times, but you just have to make sure that you have an appropriate signal, a valid signal, has a good risk to reward ratio. And if it doesn't work out, hey, it doesn't work out. But, put yourself in the mindset of this is a down move. I'm going to be patient. I'm still going to take my trades if I have them, but I'm going to be very, very, very careful. But don't get down. Don't hold on to losing trades. Always follow your rule. Always follow your process. But I'll just read it one more time. Corrective phases are normal and necessary, right? They're normal and necessary. If that is what we have, just let it play out. Might be a day, a week, a month, a year. Let's hope not a year. It's cycles of ebb and flow. But for some reason, we are only calm on the upswings. Find your downtrends in, and it will all be okay. So please keep that in mind, everybody. This is just a normal part of trading. Market will go up eventually at some point, but let's be patient in the meantime. All right. Murat says, my dog woke up. Yeah, sorry about that. She is a little monster. That's my little puppy I'm taking care of right now. She thought there was a dog at home. All right. Well, let's get back to it, and let's go through my watch list and see if there's any potentials for today. All right, so Apple, Apple had this big day a few days ago when there was some talk about taking some of the tariffs off. We had the big down day yesterday. Listen, currently we're holding in the value zone. The value zone's the 1 ATR and the -1 ATR. We did bounce off the 50 today. We're under the 50 RSI, which is not super positive. But I would be looking tomorrow possibly if we had a V2 entry. Here is day one. Here is day two. Day two washes out day one. If we got a close back above day one's close tomorrow while we're still in this big range of this big bar and in the value zone, and if we did go up and trigger that V1, we would have a move over the 50 RSI as well. I would consider taking that trade. I mean, Apple has held up fairly well compared to the rest of the market. You don't see a lot of other techs right here in their value zone. They're down closer to their 100 or their 200-day moving averages. So, the relative strength of Apple has been fairly good. And I did like the big move up. I didn't buy this, but being that we're holding inside of this range now, I do like that. So nothing today, but tomorrow if we had a V1, I would probably buy this because we'd be over 50. We tested the 50 moving average. We'd be over these other moving averages. So nothing on Apple today. Adobe's having a hard time with that 100-day moving average. The way that I look at this chart at the moment, it's in purgatory, right? It's not low enough. It's not high enough. We may find some support down here at the third ATR channel. Who knows? Ideally, I'd like to see a confluence of the 200-day and going under the 30 and back over the 30. That would be a sweet, sweet spot right down here at the 200-day moving average. If we could get those two things to line up. But again, people are not going to be too excited to buy here. Groups of buyers are not going to be too excited to buy here. They're going to be looking for the same thing that I'm looking for down here. And I want to get in when there's going to be other buyers coming in. And I know there'll be other buyers here. Doesn't mean it's going to hold, but there will be an attempt by other buyers. I'm sure of that. So nothing on Adobe. AGQ up a little today. You know, this has been a monster run. We've had a lot of volatility lately. We haven't been able to move up higher. We do have a double top here with a bearish divergence. You see this move up, how high, how strong the momentum was. We did, you know, have a dip. We painted some Ren MACD bars, and now we're higher, but the bars are not as high as that previous high. So this is what Dr. Elder would call a double top with the divergence. Doesn't mean that you immediately go in there and short that, but you know, it's good to kind of know these things, right? And be aware that, oh, maybe the metals are starting to get a little toppy. Is that going to be good for the stock market, right? So nothing on AGQ today. Our last trade on AGQ was a very simple 520 EMA cross. This happened back on the 10th of July when the 5 was under and then closed back over the 5-day, and you can see this was a beautiful trade that we had. I scaled out all the way up to here, but nothing on silver today. AMD is testing that 100-day moving average. We're at a 42.96 RSI. Yesterday was this huge bar down, so really not interested on AMD here at all. I would be interested on AMD if we, again, got down closer to the 200-day moving average and at the same time had a 30 RSI. That would be a good confluence of signals and a good deep dip buy, but nothing there today. So this pink line here, everybody, 1781.18, this is the 250-day moving average. You know, there is a good back-tested approach to trading Amazon where you stay out of Amazon if it closes under the 250 and you stay in Amazon as long as it closes above the 250. I took that exact same trade back here on the 6th. Previous day it was below, closed back above, had a couple nice days up of profit targeting, and then had to get out here, which I'm glad I did get out there because we closed lower than the previous low. Then we rallied and then we came back down. But if this closes above the 250-day moving average again today, it's a valid signal and I will take it. So that is on the watch list today, but that's at 178.17. So we're a bit a ways from there. Boy, time-wise, okay. Boeing did have a false breakout to the downside yesterday. Now we've rallied back up inside the range. I mean, this is positive. Doesn't mean I'm just going to go ahead and buy it though. You know, it looks decent, but I would have liked to see this happen off the 3rd ATR channel or under the 30, over the 30, or have a double bottom with the bullish divergence. We don't have that. Alibaba had good earnings today. You know, this is a bit of a tough one. Earnings are behind us now. We did test under the 200-day moving average, which is good. It looks like it's closing. It might close above, which is also positive. I don't like the price action of today, where looks like we're closing below the open. I mean, we're up on the day, but looks like we're closing below the open. But you know, this might be a possibility just for the very fact that it did reject under the 200 earlier in the day. If it closes back above the 200, then I will have a good risk to reward ratio. Any close below the 200, I'm out. So let me just hurry and run the numbers on this. All right, let's take a look quickly at the weekly. The weekly has formed a V2, which is not bad, and it's back in the value zone. So yeah, I am gonna consider Alibaba today. I'm gonna have to rush through these. Let's see. Caterpillar still under the 30 RSI. DDM still under the 200 and the 250. I did buy DDM here, back here when we went under the 250, back over the 250, scaled out, scaled out, scaled out. scaled out, scaled out, scaled out, and then I had to get out of the trade yesterday. So, this looks like it could be a fairly substantial loss, but it wasn't. It was very close to a break even because of my phase outs, and that's why I like to take when the market wants it from me. When the market's going up, people want to buy at higher prices. I like to sell them my shares, not all in its position, but a percentage. So nothing on the Dow. Walt Disney still underneath its 100-day moving average, has bounced a couple times at the third ATR channel, but just, it's good, but it's not enough. It's not enough for me to take a buy. Etsy's 3108 RSI, nothing there. Ford Motor Company, under the 30 RSI, under the third ATR channel, under the 200, under the 250. Nothing good on Ford Motor Company at this point. Facebook's having a strong day today. Right now, we're about halfway of yesterday's down bar. I'm not surprised that it's finding resistance there. So nothing there. Just give me 1 second, everybody. I had to close the door because of the gardener noise, and now I'm roasting. All right, so Five Below, nothing on Five Below. Gold, like silver, big, huge move off of its high today. I would like to see the 5 close below the 20 and then back over, or an orderly move down into the value zone. Look for a V1, V2. The 520 is another trade that we took back here on the 30th, and I just want to point out we went the 5 went under the 20, back over the 20. It also triggered a fractal. It happened within the value zone. MACD went positive. These are the type of trades that I really like, and this was a really nice trade. We phased out all the way to there. But nothing on gold today. Google is up today. It is holding above its 50 RSI, which is good, but there's no signals here today. The only signal you could use is anticipating that the 100 and the -1 ATR channel are going to hold. We don't know that. So again, there's really nothing here. I'd like to see some kind of confirmation that we tried to go down and reverse back up before I get involved in Google. Goldman Sachs closed below the 200-day yesterday. I might be interested in Goldman Sachs if we can close back above the third ATR channel and the 100 and the 200-day moving average. It has rallied off of its low today, but if we could close above here, I don't know if it's going to go up or not, but I do know if I'm wrong, I'm going to be wrong small, and if I'm right, I have potential to have multiples to the upside of what my risk is to the downside. IBB down again. This has had a really tough time. Intel is consolidating down here after the big move 3 days ago. I know Linda Rashke looks for this pattern here where you have a bar, inside bar, and then another bar inside here, because it usually means that there's some kind of price discovery here and that it's going to continue to move one way or the other, but nothing there. Hey, Steve Burns is here. Good to see you, Steve. Thanks for coming, my friend. I appreciate you coming. It's always nice to have you here. It's always an honor. Steve says, nice DIA bounce off the 200 SMA today. Just tagged it, didn't it, Steve? Just tagged it. All right. Let's see, where was I? Intel, nothing on Intel. Russell 2000. Holding that third ATR channel. But for me to get interested in Russell 2000, one of two things would have to happen. We would have to go underneath the 30 and back the 30 RSI and back over to give me a good risk to reward ratio and to show me that there were no more sellers under the 30, or we'd have to have a 1050 SMA cross, but you can see this is a long way. Here's the 10, here's the 50. It's a long ways away. So I don't really see anything today on the Russell 2000. Johnson & Johnson. Nothing there today. We are back in the value zone. I'd like to see this move sideways, have a V1, V2 back up. We did take the trade here back on the 8th when we had this V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. We scaled out, scaled out, scaled out, scaled out. I was looking for a close below the previous day's low, and so I did have to exit the rest of the position there yesterday. Coca-Cola up today, up pretty substantially, 1.6%, but nothing there today. Lockheed Martin, we've made a higher high. We're coming back into the value zone. I want to see this move sideways, look for a V1, V2. Here was a good V2 that I think Max pointed out, but here, we go outside the ATR channel, we come down, we move sideways, we have 1 day spike down, and then we have a V2, day 1, day 2, day 3, day 2 goes below day 1, day 2 closes above. I didn't take this trade. I think I took something else. I can't remember, but you can see that was a nice move. If I had been in the trade, I would have phased out all the way up to here. I would have had to have gotten out here when we closed below the previous day low, but I think Max got out up somewhere in here. So congratulations, Max. MasterCard up 1.7% today. It's working on a V2. Here's day 1, day 2, day 3, day 2 washes out day 1. Today, which is day 3, would have to close above day 1's close for this to be valid. So nothing on MasterCard today. We did buy MasterCard back here on the 5th when during that day we went below the 30 RSI, closed back above it, also pegged the 100-day moving average just like we did on the DIA, which Steve just talked about. I did buy MasterCard here, and I scaled out, scaled out, scaled out all the way to the top, and I ran out of shares there, and that was just about the top. So nothing on MasterCard today. Merck triggering a V1 in the value zone, but this bar is too large for me to get in front of it. If day 1's bar is larger than 1 ATR, then I'm not going to take a V1 or a V2 against it. But if we could move sideways for a little bit, then have a V1 down here, that would be awesome. I did buy Merck here when we held that previous high in the value zone. It was a really nice trade for us. We scaled out, scaled out, scaled out, and then the remaining shares I had to get out of yesterday. Microsoft down a little today. This was a big stinker that we have. There is nothing here on Microsoft. We did buy Microsoft here when we had this higher low V2 above the 50, above the moving average, above 50 RSI, but yesterday got us, so we did have to take a loss on that. So Netflix is somewhat interesting today. We were under the 30 RSI today. We did get very close to the third ATR channel. Looks like we're closing back above it. There's not a double bottom here with, well, I guess technically there is. It did paint a little green, but we do have slowing momentum. Even though we're going lower and lower and lower, the momentum to the downside is getting less and less and less. So I am considering buying this, and basically because we went under the 30, back over the 30, we're under the 200-day moving average, so it would only be a half a position. So we'll mark that. Nike's not doing very well today. It's under the 200, so I don't want anything to do with it. Philip Morris we have, moving nicely, hit one profit target. PayPal is up today, has that 10-day moving average right above it, so I don't think I'm going to do anything with PayPal. Qs, I would be, if I was interested in the Qs, I would be looking at buying the Qs with going under the 30 RSI or back over, a close under the 250 or the close under the 200 and back over. Those are all good back-tested, quantified, profitable approaches to trading the Qs in the long term, but nothing there today. I did actually sell some puts on the Qs and on Apple today, and after we're done, I'll show you where and why I sold those today. Snapchat, nothing there today. It is setting up for a V1, V2 in the value zone. However, since this is a lower high than these highs, I would need the price to come down, wash this out, this low here, before I would take a V1, V2. SPY, of course, we bought that yesterday, sold at the open, finally had a profitable trade on that. I will be buying that at the end of the day. Square is just moving sideways here under the 30 RSI, so nothing there. SSO, which is the double leveraged S&P, did form a V1 back in the channel. It's only a 38.77 RSI, so it's kind of in no man's land for me here. Bonds continue to go to the moon. A lot of volume came in today, interestingly enough, and we are off of the highs. So, you know, the way I would look at that, and just basically because we're so high, is I would look at there's probably quite a bit of selling going on in here now. Tesla's been taking it on the chin here. Did bounce off the third ATR channel, but nothing there. So Twitter is setting up for a pretty sweet V1 or V2 here. Not now, but you can see, you know, we made a high, we came down, we made a lower high. It came down again, made a lower high from there, but we did wash out this previous low. So, you know, we did hold some support here. We did stab down today or tomorrow. Today, if we closed above yesterday's close, I would buy that. It's stinking right in the middle of that value zone, which I like. Or tomorrow, if we have a V2, if it's not too high. If it closed up here, I wouldn't buy it. But if it, you know, closed here, I would buy it. But nothing on Twitter right at this moment. UNG, wow, look at that, everybody. Oh, Murat said 39.22 on the gap. Yeah, it might fill that gap. It definitely may fill that gap. Market doesn't like gaps. It doesn't like vacuums. UNG, big day today on natural gas. United Health Group just moving sideways here. Oil rejected the 200-day pretty substantially, back in the value zone. MACD did go positive, but really nothing there. We did, similar to MasterCard, we bought this back here on the 7th of August. We pegged the 30 RSI intraday. We closed back above the third ATR channel. The close was above the open. We did buy this. We had a nice 2-day trade. I did exit here when we rejected the -1 and the 10 ATR channels. So, or the 10-day EMA. So did get out here. That went racing up, and now it's right back down. Dollar had a really good setup here. Moved up, moved down, moved sideways, but I just didn't get a valid V1 or V2. VIX. Well, you know, this is pretty bearish for the VIX. It was a false breakout, reversal. Looks like at the moment the close is going to be below the open. V1 to the downside. I'm not saying short this, but you know, that does look decent for the market, but nothing there. We did buy this back here. This was one of the best trades of the year for us. We had a V2, day 1, day 2, day 3. Day 2 went below day 1, day 3 closed above day 1. We also rejected the 30 RSI. We also rejected the third ATR channel, closed back in. And this was a great trade for us up to here, about 14.5%. Verizon, not respecting that 200-day. Woo, Walmart. I thought about stepping in today. That's why I have the line here, but I decided not to do it. But Walmart had really good earnings. You know, I always advise that people do not buy and hold through earnings. But after earnings, you know, the way that you can approach this is you have an earnings day up, you know, using the low of the gap up day as your stop. Earlier in the day, we were down here. I thought about stepping in intraday and buying it at the 50, And obviously it would have been a good move, but I didn't buy it here. But right now, you know, I would not buy even using this. The risk to reward ratio doesn't make sense because, you know, maybe you go up here for your risk, you'd have to go all the way back down here for your up here for your reward. You'd have to go all the way back down here for your risk. So should have stepped in intraday, but I don't step in intraday very often. But in this particular case, it would have worked out. Energy Select is still under the 30 RSI. Financials not able to get back above the 200. Real estate having a good day today, but it's just too high for me and range bound. Utilities having a good day as well. It's above the 1 ATR channel, so I wouldn't buy it. Healthcare. Yesterday we, you know, went strongly below the 200. Today, that 200 now is acting as resistance above it. It's a 42.88 RSI, so nothing there for me on healthcare and pharmaceuticals. You know, we're at a 32.58 RSI. If we could go below the 30, close back above, go below the 30 ATR channel, close back above, that would be a good risk to reward entry. Doesn't mean I know it's going up, but it does provide me with a good risk to reward ratio. If I'm wrong small. If I lose the third ATR channel and the 30 RSI, and if I'm right, you know, I may have up to in this area for my potential profit. So so let's take a look at our possibilities here then. Hey, Brian 512's here. Hey, buddy, how you doing? Good to see you. I'm always impressed when you come back and you want to learn about investing and trading. Brian's our friend of a channel. He's 17 years old. He's trying to get some experience under his belt as far as technical analysis so he can do some investing so that when he retires, he's going to be a multi-billionaire. Right, Brian? That's the plan. Steve says, dueling China headlines today. They want to meet in the middle or retaliate. Yeah. Well, not very clear, is it? Murat says Twitter has the gap at 39.22. I think it is going to meet that first. I have a position in Twitter at 37. Oh, good. Good. Mount Doji says, wow, DIA. Yeah. Well, it's all gone positive. All right, so let's take a look at the potentials here. The potential is Amazon with the close over 178. 1781.19. That would be my entry. So that is possibility. Alibaba is holding the 200-day. Goldman Sachs, I don't know why that's on there. Netflix did bounce off of underneath the 30 back over. And Twitter. So, I mean, Twitter does look good here, but I can't anticipate it, but I need to see it move up. So, nothing on Twitter then today. So, what I have to do is I have to narrow this down. So, Amazon's not there yet. So, how much do we have? 6 minutes. 1781.19 would be my entry on Amazon, but it's not quite there, so can't really do anything yet. Alibaba is back over the 200. A lot of buying today. Earnings are out of the way. We're above 50 RSI, so Netflix is having some issues here with the resistance of the previous low here. It would be better if we could close back above the 30 RSI, back above the 30, which it looks like it's going to, and actually closes back above that range as well. Going to be close. It's going to be close. Obviously, I don't want to take all three of these. They're too tech related. Let's look at the weekly on Amazon. Amazon did reject the 50-day move, the 50-week moving average below it, which is good. Alibaba did trigger a V2 and reject the 50-week moving average. That is good. Netflix is definitely the weakest of the three. So I'm going to go ahead and take Netflix off of the candidates because it is the weakest. Amazon is still under the 200. Alibaba. So we have 3 minutes. All right, so I am going to put an order in for Alibaba. Market on close.
Order cancelled.
All right, and it doesn't let me do a market on close. So the reason I'm considering Alibaba here, guys, is one, because we have earnings beneath it. It was on huge volume. We did gap up higher in reverse, but we also did test the 200-day again. So all in all, I think the risk to reward here is decent if we're wrong with the close under, and mainly because it did bounce off of that 200-day moving average. Just take a look. How much time do we have? We have about 1 minute. NASDAQ did go back negative again. Let me look at the intraday on this. So it did reject the 200 on the 39-minute. Amazon is not there. So we are above 51 RSI. We are above the 200-day moving average, although we're being rejected at the 50. I think I'm just going to let this one go, everybody. What's getting to me is the close below the open. It is holding that previous high. It's kind of a coin flip, but I think I'm just going to have to let it go and not take any positions today.
Order filled.
Yep, so I did not buy it. So the only thing we have is Philip Morris. We did hit one profit target on Philip Morris today. And then SPY, we did hit the one profit target. And I did buy SPY again today at 284.65. So yeah, no positions today except for the SPY. I do want to show everybody that, when we get into these down moves where where we're in purgatory, we're not quite at the buying zones, but volatility is picking up. That is when I like to sell puts because, when volatility picks up, the put becomes more expensive because they're pricing in the volatility. So, it's one approach that I use. I'm very conservative with it. I wait for the market to go down so that the volatility prices get higher, but I also take a look at, where I would not mind buying
Order
Apple.
cancelled.
So I did sell a put on Apple today. I like to look at put prices on 3 time frames. I picked the $180 mark was my strike price. Has the support of the 20-month moving average above it. So as long as it doesn't close here by August 30th, I will get the full premium. If it does close below, I'll be required contractually to buy the stock at $180. But what I really liked on the weekly, do you see how the $180 mark has the nice 100-day moving average above it, and it really did respect the 100-day moving average last time. And then on the daily, the $180 price down here is going to be close to where the 30 RSI is. So that is why I sold some contracts today, some put contracts on Apple expiring August 30th. I did get a nice premium for them. So as long as Apple does not close above this line by August 30th, I'll keep the full premium. If it does close below this line and I'm required to take the stock, then I don't mind it at these levels, and then I'll have to manage it from there. I look at an option trade, everybody, just as a regular trade. I take a 10% position size, even though I have so much protection. I do have about 11% protection down to my strike price, which is good. And then I also did sell some puts on the Qs as well, and I sold them August 30th at 169. So as long as it doesn't close beneath 169, I'll be able to keep the full premium. There was a lot of premium because of the volatility. On the monthly, again, we have the 20-month moving average above us. That should give us some protection. On the weekly, it dovetailed nicely with the 100-day moving average and the third ATR channel. And then on the daily, again, it puts us down here in the very extreme areas where we would have like a 30 RSI, depending how fast we got down there. So, when the market does has this kind of formation where it's low, volatility's picked up, but it's not quite low enough for me to buy the stock, that's when I like to sell puts and sell the premium. So, that's just another profit center. But I don't sell puts all the time. I only sell them when volatility really picks up, because the volatility pricing in the option gets more expensive and you get more. So we did have a nice positive day today, which I am grateful for with our 2 little positions, but at least we put some profits back on the board. So, all right. Brian says, that's the plan. I hope that's the plan, Brian, and I hope we can get you there. Max says ES looking like it had a washout day. So the S&P looks like it had a washout day. Chris F. Hey, Chris, how you doing? Good to see you. Thanks for coming back. Hi, Greg. Do you hold you until expiration or close early after certain max profit is reached on my, I assume you're talking about my puts. It varies, but generally the rule of thumb that I use, Chris, is if I get 80% of my premium within the first half of the option period, I will go ahead and just take it off. If I get 90% of my premium in the second half, I'll go ahead and take it. So if it's a monthly contract and I sold it for $1,000 premium, if it gets to $800 and I have more than a half left, I'll go ahead and just take it off and lock in the 80% of my premium. If it's in the second half of the contract period and I get to 90%, I'll go ahead and take it. I mean, there are times where I just let it expire, but if there's only 5 cents or 10 cents left on the option, and I have 2 weeks left, why am I holding that for just that amount of money, right? $10 or $20 per contract. So that's how I look at it. Um, but yeah, sometimes I hold just till expiration, but most of the time, if I get 80 or 90% of the premium, I'll just go ahead and take it off, because now your risk to reward's getting bad again. You don't have a whole lot of reward left, and you have risk if something goes against you. But that's generally how professional option traders look at that. They usually don't let them expire. All right. If you guys have any other questions, please let me know. I just want to put in my quick plug real quick. Just let everybody know that I do offer private one-on-one coaching and teaching and mentoring lessons in the evening time via Skype. I mentioned this yesterday, but I think one of the biggest advantage of doing private lessons with me is twofold. One, after I teach you, I make you teach it back to me. We go through a bunch of charts. I say, okay, break it down for me. What's going on? What's positive? What's negative? And if you can't do that, then I don't know. Then I know you really don't know it yet. But if you can teach it right back to me, then I know you know it. And then the second advantage is a lot of people, they're good with the technicals, but they don't put together an actual plan for themselves based upon how much time they have available to be in front of the computer screens, what kind of dollars we're dealing with, what your actual goals are. So, what I do after you tell me, what your goals are, what your challenges are, how much time you have available, what kind of, financial situation we're talking about, then I'll go ahead and customize a plan for you based upon all that information. So if having lessons, one-on-one lessons with me, if it interests you, my hourly rates and my contact information are in the description of this video, and then you can also send me a message on Twitter. And then lastly, if you like this podcast and you haven't subscribed, please subscribe to the channel. And or if you like today's live stream and it's valuable to you, please do me a favor, hit the thumbs up button. It does help YouTube promote the channel to more people, and I have a lot of people that email me and say, Greg, it's really helpful, I'm really glad I found this channel. So I want to help as many people as I can, and you can help me do that by sharing it on social media, or at the very least by hitting the thumbs up button. So I hope that helps. This is going to be perfect timing. Just as soon as the podcast is done, my gardener will be done. I can just feel it. All right. So where did we end up today then? So we ended up about 100 points up on the Dow, slightly down on the on the Nasdaq, and up on the SPY. So yeah, nice profitable day today. Philip Morris really came through for us today, which was good. And, I do want to mention, if you guys took a hit yesterday, it's okay. Don't think about trying to make it back quickly. Obviously, you take a big hit, you want to make it back in the next minute, but it might take a while. It might take 2 weeks, it may take 3 weeks, it may take 2 months, right? But that's okay. If you try to rush it and try to get it back quick, the stock market gods did not like that, and they very rarely will accommodate you. So, yes, we had a big down day. Let's just stick to our guns. Let's stick to our process. Let's just continue to trade completely normally, not bigger, trying to get it back quickly. Let's just let the process and our edges work out for us over time. If it takes 3 months to make back, then that's just what happens, right? But at least you can have the peace of mind knowing that you're following your rules, and you should feel good about that. All right. All right. Does anybody have any other questions for me? Anything I talked about today, or if you'd like me to take a look at anything, please just let me know. All right. Murat says, the market feels like they want to clear all weekends. Yeah. I agree, Murat. It does look like we're kind of looking to wash people out, flush people out. But again, that's an opinion. We don't know that for sure. I agree with you. It looks like it. But more importantly, even though we have that idea, we have that theory, let's not, preemptively enter based upon anything that we think. I mean, if we have a big washout and go back up, then that's good, right? I mean, then we have a valid signal and your idea also was validated. But, let's be price action traders. Let's trade what the price is actually showing us. Murat says, when I look at intraday charts, that is what I feel. Yeah, I don't disagree, Murat. I don't disagree. I mean, whenever volatility comes into the market, they are. The market is trying to shake out loose hands. But every once in a while, those shakeouts keep going, right? Let's not assume that they're going to shake out in reverse. We don't know. Frederick says, do you sometimes hold to put a trade because of Friday and the weekend is coming? Yeah, that's a good point, Frederick. I mean, I think if I'm honest about this, if I have really good setups on a Friday, I'll go ahead and probably take one. But if there's bunches and bunches of them, I'll probably still take one or two, but I'm not going to take as many as I normally would with the weekend coming up. So that's kind of how I view the weekend. I still take my trades when I get them, but I'm even more aware and careful with correlation and taking multiple positions. But I feel you. I mean, things happen over the weekend, especially in the political world. So yeah, again, all we have is Philip Morris. And our overnight SPY trade. And I feel pretty good about that. And then the Apple and the Q puts as well. All right. So tomorrow, actually, I'm going to be a guest on a podcast. I'm going to be interviewed a couple hours before the market closes. It's on 10minutestocktrader.com. So when that, I don't know when they're going to release the podcast, but I'll definitely let you know. But it's kind of fun, right? Going to be interviewed on that, I guess, about a little bit about my trading history and how I approach the markets. But it's Stock Trader, 10minutestocktrader.com. But when that's out and done and I have the link, I'll definitely share it. So it should be interesting. Murat says, I am not opening any new positions, but I am checking very closely what I hold. Good, good. They do very big up and down swings. One day up, one day down. When it does downswing at the bottom, volatility goes up, or volume goes up. Yeah, like I said at the beginning, it's kind of a crucial time right here. I think volatility is here to stay for a while till things kind of mellow out a little bit. And again, that's why I like to sell puts in these positions, because the volatility goes up, your premium goes up, and you do have some protections to the downside. So I basically look at it like I'm getting paid to hold a position until it gets to the price that I want to. But again, selling puts is risky. I mean, buying and selling stocks risky also, but I still take a 10% position size. I look at it on 3 time frames. Check the deltas, check what the probabilities are. But just because you have a 10 delta, which means there's a 90% chance you're going to end up in the money, doesn't mean that it's going to be profitable over time, right? It's just like if you had, Golden State Warriors play the Phoenix Suns, pretty sure the Golden State Warriors are going to win, but you're probably going to have to lay $500 to win $100, and that's kind of how it works with puts, right? You only you have a limited amount of profit, but you have an unlimited amount of loss. So you really have to be careful. You have to make sure it lines up on multiple time frames. You have to make sure that you sell puts when volatility is higher. That gives you an edge because you get the higher premium. So this is exactly the type of place where I like to sell premium and sell puts. All right, last chance for questions. Otherwise, I'm going to get out of here, go hike, go say hello to my gardener. Well, I hope everyone's staying safe out there. Hope to see you guys tomorrow during the last hour of the market. It's the end of the week. What a volatile, crazy week, but I think we've done pretty well. Johnny says, the algos are out to get me. Haha, I am completely fine with watching for a while. Good. I'm glad to hear that, Johnny. That's, sit on your hands, be patient right now. Sit on your hands, be patient. There's a lot of emotion in this market. And, let's wait until we see some things really going up with some volume, with some commitment. Otherwise, we make money just by not losing money, right? All right. So, Johnny, thank you for coming by. I appreciate it. It's always good to see you. Murray, always great to see you. Always great comments. Frederick, hope you're doing well, my friend, with your business there in France. Thanks for coming by. Chris F., I hope I explained about how I handle the options. It's good seeing you. Max, thank you very much for coming by. Brian 512, my hero, for studying finance at such a young age. Thanks for coming by. Let me know if you have any questions. Mount Doji, good to see you, buddy, as always. Glad you got those ATR channels taken care of. Steve Burns, always an honor to see you. It's always great having you in the chat. I'm always really excited when you're here, and I think everyone else is too. You're such a well-known trader and author and mentor and all-around good guy. Let's see. Did I get everybody? I think I did. If I missed somebody, I apologize. But yeah, I think I did. So, all right. Well, thanks for coming by, everybody. Hope to see you tomorrow. And on the way out, got to play the legal disclaimer again. So have a good rest of your day. Go out and do something nice for somebody today. Take care, everyone. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.